In this episode, I'm going to be answering one big question. Asked me, Liam, would you rather buy your own property to live in or start buying investment properties? We're going to explore this in the next few minutes. I'm going to be answering one big question. This is coming from a woman called Susan Johnson. This is a great question. And she has asked me, Liam, would you rather buy your own property to live in or start buying investment properties? We're going to explore this in the next few minutes. So, would you rather buy your own house to live in or would you rather start buying investment properties? This is a really good question, and ultimately we are taught to get our foot on the property market. I'll give you my opinion, and it is just my opinion. I'm not saying I'm right, I'm not saying I'm wrong. Different people will have different opinions, but knowing what I know now about property and investing and freedom and wealth creation, the fact that I've now gone and helped hundreds and hundreds and hundreds of people learn about property investing, about wealth creation, about business. If I was in a position now where I was, say, renting a house and I had the opportunity to buy my own property to live in and get a mortgage, or use money that I've got, say, for a deposit to buy an investment property and continue renting, I would buy an investment property. Let me tell you why. All properties are assets. And if you buy a property in the right location, in many parts of the UK, your asset will go up in value on average 100% every 10 years. Can you believe that? 100% every 10 years. Now, why do we know this? Well, they started to record property prices in 1088, and data doesn't lie. And ultimately, this doesn't happen, every 1 to 10 years. There's cycles in the market, and property prices might double in a 5-year period or a 15-year period. So it's an average that's been taken since 1088. But how amazing is that? You buy a house today for £100,000 in the right location, and in 10 years, it's going to be worth £200,000. And the equity that you can build up in property over time, for sure, will hopefully end up paying off any borrowing or debt that you have against the asset. The other thing that you've got to remember is that buying houses and borrowing money through mortgage companies is what we call good debt. It's not bad debt. And over time, capital appreciation and inflation should erode the initial debt that you had on the property. And once you've got equity in a property, what you can do is refinance and then use that money to buy more property. And you follow the buy, refurbish, refinancing model. Now, why would I want you to start buying investment properties before your own house? Well, let me explain. When you buy your own house, yes, that will give you, if it's bought in the right location at the right time, capital appreciation. But actually, the house you're living in is going to cost you money. Why? Because you've got to pay for gas, electric, water, TV license, upkeep, maintenance, decoration. You name it, you've got to put money into that property in order to live and in order to have the life that you want to have and, operate the house like, turn it into a family home, for example. What I prefer to do and what I advise to do is get yourself some investment properties, either using your own money or preferably or invest the money. I've been able to add over £12 million worth of property to the portfolio. I've raised over £5 million in joint venture finance, and I've become financially free as a result of using other people's money, using investor money. What you then do as you build up your investment portfolio of single lets, HMOs, serviced accommodation, the cash flow that you make from those properties will then cover your mortgage payment that you need for your own house. You want a bigger house? which will cost you more, will be a bigger investment, and maybe your mortgage payment will be a lot bigger. Have the liability, which is the running of your house, the mortgage of your house, be paid for by an existing property portfolio. Once you have assets, once you have income coming in on autopilot from tenants, you are then financially free. And at that point, I would then look to buy your own house, because really you're then getting a house for free. That's my personal take on it. There's other people out there that will disagree. If you're watching this now, let me know what you think in the comments below. Do you agree with me or do you disagree with me? If you agree, let me know why. And if you disagree, again, let me know why. I absolutely love this topic. It's something which will continue to be talked about for weeks, months and years to come. But here's the thing. An asset is an asset. I focus on building assets where I get my tenants to pay the mortgage, and it gives me positive cash flow, which enables me and will enable you to live the life of your dreams. If you're watching this video now, you have definitely got an interest in becoming a professional property investor or expanding on what you already know. Maybe you've got a few properties already. I can help you do that. I can help you become financially independent. So I'm now going to invite you personally to come and spend an entire day with me at one of my up and coming events. Click the link in the description, get your complimentary ticket. Don't be scared, come open-minded, and by the end of the day, you will have knowledge. Your mindset would have changed and you will be that step closer to becoming financially free and getting your first or next deal over the line. I'll see you at one of my events. Click the link now and get your complimentary ticket. I look forward to seeing you.